All right. Right. Class starting, right? 6 o'clock. You guys can hear me okay? Okay, great. Okay, Ace, can you post the mission and vision statement really quick? All right, so this is week 3 of the 15-week class, online class. And I want to do a quick review really quick. We did onboarding. Last week we did support resistance. That took 2 classes. Week 3 is now pattern breakout. And I hope I'm giving you guys, if you do the homework, you go to the class, you watch the recordings, and then you trade with us every day, even a little bit. You should be able to put together your own personal strategy, okay? Nowhere in these lessons do I tell you my personal strategy. You know why? I'm not teaching you my strategy. You are a different person altogether. So you will have to come up with your own strategy based on your personal life. I am a single mother with 3 children. I can't day trade. Okay, you can swing trade, but you have the skills and the strategy to put together. I am a retired doctor. I have 3 grandchildren. I can only trade in the morning. Well, yeah, that's up to you, right? But you could put together these lessons and come up with your own strategy. Does that make sense? Can someone help Grimskunk? How do I hear the class? You guys can help him behind the scenes there. All right. So that's what I wanted to just point out. And I've done the class such that it builds on from the previous class. You get smarter and smarter, and the topic becomes a bit more complex, and you will need the previous class to understand this one. Because in the pattern breakout class, I will talk about counter trend lines, and it will be obvious to you how everything is going to flow together. Okay, so at this point, please mute your mics. Okay, and if you guys have a question, just write it in the Discord there. Do not interrupt me, just in case I have something really important to say. Just in case I have something really important to say, I don't want to lose the train of thought just for our sake, right? Okay, where's the mission vision statement? You guys took it off? Okay, here it is. Okay, so let me go over the mission and vision statement really quick again. Actually, I'll just go over the mission statement today. The mission of the United Trading Capital is to become the world's leading network for institutional and proprietary trading through mentorship with a lifetime goal of independent wealth and continuous pursuit of philanthropy. So when we talk about the world's leading network, we want to be competitive to any other network on the planet. I mean, we want to grow the membership. We want to grow the expertise, the talent. We want to grow the mentorship ability, and we want to grow our competitive advantage. Okay, we want to grow our research department. We want to grow our marketing team. We want to grow our everything in our. Right now, we're just on an online Discord, but years from now, I mean, TJ's never revealed this, but we do want to have plans of having an official office somewhere in New York or Toronto or in London, where you can walk in and say, "Yeah, this is the United Trading Capital headquarters," right? So, okay, that's that. And I do want to go over one sec. I want to go over really quick here before we go into class the idea of front loading. Where's the trading floor? Just give me one sec here, okay? Oops. I'll pull it up. Okay, so it's critical, just so we know and we understand it. It is just to educate us. No, I trust that no one in our team is front loading. The Bloom price. Okay, it's going to be clear in it's going to be clear here in a few seconds here with front loading, okay? So this is this is the way it's shown up in this textbook. It's a finance textbook, okay? And it's basically, look, let's read the first sentence. To minimize the implementation shortfall, the trade should generally be front-loaded and favor immediate execution. It says should generally be front-loaded. This book is saying front-loading should be done here, okay? It is a strategy. It's no longer illegal here. So why is this, you guys, we're not going to go through what the entire book is saying, but in this definition, front loading, it basically happens to get a competitive edge, to get into a deal or into a trade before somebody else. They want to get in before somebody else. Okay, so how does this front loading idea work? Banks will need to front load other banks. Okay, other institution will have to front load other institutions. How else can they get a competitive advantage on the other competition? How else can they get a better price? If the price is at $1, if the bid is at $1 and the ask is at $1.02, if you don't get in at 101, if you don't get in before them at 101 inside the bid, if you don't front load the other competition, how are you going to get into this deal? How will you ever get into the transaction, right? So in this case, the word front loading, this is a strategy used, okay? So it's actually a legal strategy. So when is it illegal, okay? This is when it's illegal. And Vegas, you could help me type this on the thing. Front loading becomes illegal when there's a collusion, when banks collude with each other or people collude with each other. They conspire with each other to say, guys, we're getting into a stock here at $1 together before the market. Okay, they collude, they get in before it, and with the intent to deceive the public for personal gain. Is that a very big that's a huge difference from the bank trying to front load another bank to get a competitive advantage to make a better deal? Is there a difference there? How I just described it? Is that fair? That's clear how I explained it, right? So yes, when we say, guys, yes, I need to front load, I need to do this, then that's a strategy. But if we're colluding to deceive the market for $1,000, that's collusion. You could go to jail for that. That's a crime. All right? So that's the definition of front loading. All right? So let's go to patterns class. Okay, so guys, click on this link. I should have gave this for you for homework, but I hope you already watched the videos. So the video I asked. Okay, so this is from Dan Zanger. This is Dan Zanger. He's actually in the Guinness Book of Records for the highest swing trading profit in the shortest amount of time. I think he made $18 million in 18 months using 10 grand. But then again, he did it, I think, during the tech bubble, right? He basically put 10 grand into something, it ripped, right? It doubled, and then he put it in again, it doubled. Every day it doubled. I'm pretty sure. But he was also a very good trader. He actually lost tons of money prior to the tech bubble. So kudos to him. So today we're going to use his chart pattern stuff, information, okay? There's 11 chart patterns here, 11 most common stock chart patterns on the right there. The cup and handle, flat base, ascending, all the way down. So after this class, save this, bookmark it, and even maybe print it off on a booklet and try to memorize it over time, because these 10 patterns show up the most, okay? Very common. So I'm just going to pick and choose here for the sake of time. Let's say the cup and handle pattern, right? There's a cup and handle pattern.
Is there another page that you're demonstrating visuals on?
Yes, I'm in Bloom Plays.
Oh, okay. So you're speaking here, but you're on Bloom. Okay.
Yeah.
Okay. I'll mute now.
Yeah. Okay, so what is the cup and handle really quick? I'm just going to teach you the example. Okay, so basically I'm going to give you the example. Okay, the cup and handle, and I want you to go back and be able to do this yourself for each of these. You're not going to be able to do this overnight. It's going to take you some time to learn the psychology behind it, how it happens, where it happens, and how to attack it, how to take the entry, okay? So here's the cup and handle. It's actually on XXI, so take a look at XXI. This is how we knew it's going to break out. Okay, first of all, it takes a dip, huge dip here, right? So look, pay attention to what I'm saying here. When a stock takes a dip like that, look at that red line that I'm drawing. When a stock starts taking a dip like that, you guys can instantly tell yourself, this thing is actually, it might be forming something that I might be able to take an entry on. Okay? Never lose sight of what is about to happen. All right? This is tanking there on that red. And what happens after that red? In this cup and handle, I'm teaching you the cup and handle psychology right now. Right? And then what? We draw, look at the red lines that I'm drawing. What am I drawing here? What am I drawing here? I'm teaching you cup and handle, but I'm teaching it a different way. Look at this.
Support resistance.
Okay, great. Please mute yourself there. Everyone mute, and then type it in the Bloom place. Deal? These are all rhetorical questions. I already know the answer, but you can type it so I know, okay? All right, so what's happening here? In this parabolic move in cup and handle, what's happening here? Exactly. Support and resistance is drawn. For what? So we can distinguish what? So we could figure out congestion. We could figure out accumulation. Who's accumulating what? Correct? This is part of the cup and handle, isn't it? Okay, let's focus. All right. Okay, look at the volume here. I'm going to teach you this right here. I want you to be able to look. I'll give you the example. This here. See this on the second half of this cup, right? On the second half of this cup, what's happened? On the first half of the cup, no volume. This thing is just tanking. But on the second half of this cup, what's happening here? The exact same thing that I just said. I said people are watching this entry. They're not giving up on this ticker. They're waiting. What's happening on this volume here? Volume starts to come back to build the second half of the cup. Is it true? It's my red circle. Do you guys agree that volume is coming back to build the second half of this cup?
पढ़ना देखो. Live trading lecture दे रहा है वो cup and handle. Superbloom करके एक बंदा है.
Okay.
देख रहे हैं? Cup and handle formation सिखा रहा है.
Okay, guys, mute yourself. I'm gonna roll. I'm gonna miss this. Okay, we restart. Okay, you guys agree that in the second cup and the second form here, people are actually accumulating these shares. People are gathering these shares, correct? On the second half, right? You agree based on the volume. Okay, so the cup is not forming. When people start to form this cup, what are they selling themselves? We didn't give up. We're starting to accumulate these shares. Now the full entire cup is forming. This is becoming a parabolic move. Okay? You guys agree that's what's happening here? This was on the weekly chart. I want you to pay attention to that. Okay? Here's the handle. What's happening in the handle really quick? It's consolidating. It's pulling back a little. It hit the red line, which is resistance, right? We covered this last week. It hit the red line, which is resistance. Look at back in 2014. How many times did this get pushed back down by resistance? This resistance area is heavy. There's bag holders here. There's selling pressure here. There's bears attacking here. Okay? There's institutions that are actually dumping here. Okay? Or shorting here. This is why that red line, that resistance, is so incredibly powerful on this chart. This is the top of that cup, right? This is on top of the cup. those blue lines there, I'm drawing, it's consolidating. It's pulling back a little. It's taking a break. So look at the top picture. I'm drawing, look at my little red circle there. I'm circling the red there, right underneath my candle. Why? The volume. I want to study the volume there. I'm studying it. I'm like, hey, they're dumping. I get that. Once the selling pressure comes off, what do I notice right away? Once all the selling pressure comes off, buyers start to come back. This is exactly what we want to see in a cup and handle, right? It's consolidating. It's consolidating, and then buyers start to come back. Is that true? Okay, is that true here? I'm studying the volume. This is why we have to read the volume. Look at here. It's consolidating on that handle. The selling pressures come back from the green. Buyers are starting to come back. Is this fair? Can we catch this next time? Next time a stock is tanking, and we start to watch it over a period of time, and we notice what? Buyers start to come back to build the second half of the handle. We have to pay attention to this sort of stuff. This is the psychology behind this move. Okay, and the cup and handle is actually one of the most powerful, most well understood patterns in charting. This is why I'm going over this now. Okay, so buyers start to come back and then tax the red line. Okay, it tax resistance, right? And today it finally broke out. You guys agree it broke out today, right? It broke over resistance, started ripping. And look at me, I broke it down. I broke the handle down. I broke the second half of the candle cup down, and I studied the handle, and I studied the second half of the cup. This picture here is the second half of this cup. What am I drawing here? This is gonna be tricky. This is also a pattern, isn't it? Look at this. Isn't this not a? Is this not a pattern? This is what? The ascending triangle pattern, isn't it? This is another pattern in chart trade. This is another pattern. Like, okay, it's following the recipe for an explosion. It's that green line there, that support line. Remember, we talked about it last week. Support. It's now holding support. I'm drawing those red dots, those red circles. This line takes a lot of skill to draw. I think I'm drawing a line that defines the chart. This line is respected 1, 2, 3, 4, 5, 6, 7, 8, 9 times I circled it. That's why I was so confident. If you read my notes, I said explosion is coming. Because it matches the cup and handle. It accumulated on the second half of that candle. The second half of that cup, it accumulated. All right? It's respecting this line. It's consolidating just the way I want it to. This is building for an explosion. Okay? So does that help with understanding how the psychology works behind the cup and handle? What people are actually waiting for? Sellers are done selling. Buyers start to come back, right? To start building the parabolic move that needs to happen. Okay. Know if I lost you there, actually. Okay, just a really quick point here. I also studied the volume. I always look at the volume. What am I noticing here? I'm actually noticing the selling pressure. Look at I draw a diagonal from the left, top left to the bottom right, right? The selling pressure on January 3rd to July 16th, they're running out of shares to dump. How can there be resistance if there's no more shares to dump? Is what I wrote in my notes. There can't be any more shares. There just can't be any more shares. If you keep dumping all your shares, you just can't have any more. You just can't. All right? That's a psychology. You can't. There's 10 million shares. They're all dumped. People can only buy now. Okay? Right? I studied. You guys have to study it that way. So this is the parabolic move, and we're going to go back to the cup and handle because the cup and handle is actually many patterns combined here. All right? Okay, what's this? What am I drawing here? What is this? What is that right there that I drew? This is the second half of the cup and handle. What is it exactly? Isn't that a flag? This is a rip of momentum from sometime in 2017 to July, all the way straight up to resistance and consolidating for weeks. And then a break of what? You guys won't know the answer. Don't worry. Don't worry. But once I'm piecing it together for you guys to understand the full picture. Okay, look at the black line that I'm drawing here. Okay, it's not straight, but what's the black line that I'm drawing here? You guys will know. What is it? The black line. It broke the black line. The counter trend line that we drew, that we studied last week. Correct? So if you're watching the cup and handle, oh yeah, oh crap, you guys, okay, so you guys, okay, I can't see you guys comment, okay. Okay, so if you guys are watching the cup and handle, just watching the formation of this thing all throughout the summer, there's multiple entries on here. You could have accumulated when the cup was forming, right? You could have took an entry when resistance was broken. The second resistance was broken, right? Look, you draw this again. This black line here. Okay, look. See that black line was resistance? You could have taken entry there, right? You could have taken entry there at the break of resistance. This is the break of resistance, a break of accumulation. You could have bought entry there. At the flag, it started to rip. The other black line, the counter trend line, you could have taken entry there. Today, you could have taken entry there. You could have attacked this XXI multiple times with no regrets. Because what? So this is really important what I'm going to say here. All right? This is really important here. As you notice, this first half is being formed. As you notice, the first half of this is being formed. You could start planning your entry. You're going to say, guys, I think this is the first half of this cup and handle. Buyers are coming back. We could attack this multiple ways here. We could accumulate heavy here. So this is why the cup and handle is this is very powerful XXI. This XXI will probably make a very powerful move because this cup and handle has been forming and consolidating for so long. For a couple of years now, it's been doing this. So this is why we think the explosion will go to the 5s and into the 6s, right? This is a very big, this is the lifetime of this chart, is a big cup and handle, okay? Multiple entries can be taken here, not just a day's trade. If you notice something like this on a yearly chart of any chart, you guys must be saying, guys, this is a long-term trade. A monster is coming, all right? That's how you need to study these patterns. Okay, so let's go back to the patterns. That's how detailed you have to understand these patterns. Okay, I'm just going to go through one more example. So, okay, so let's look at the chart really quick. So, on just the cup and handle, I went through the parabolic curve. If you look at the parabolic curve, it is the second half of the candle, the second half of the cup, right? Look. So I'm not cheating my class, correct? I'm not skipping patterns. If you look at the parabolic curve, what is that? The parabolic curve is the second half of this cup, right? Right. That's right. Right? I'm not cheating. Okay, the flag pattern, right? Look, I'm not cheating my class. I'm thorough, right? Look here. What's the bull flag? That is the handle on this parabolic move. Does that make sense? So you will quickly learn that as you move through these patterns, they will all piece together to actually create a super pattern, which is essentially, I would say, the cup and handle actually encompasses most of these patterns combined. Okay, so that's why I went through the cup and handle today. Okay, so we went through the ascending triangle pattern. Okay, we went through the ascending triangle pattern, correct? Did I not draw this ascending triangle pattern? Yes, I did. Okay, so let's focus now. I'm going to take one step back to focus on the psychology of this ascend, because when you notice the ascending triangle pattern, also from class, it's a very powerful, it's cup and handle is powerful, but the ascending triangle patterns is powerful as well. I'll go through the ascending triangle, and actually there's 3 triangles, right? There's 3, I'm going to put this here. There's 3 triangles. ascending, descending, and symmetric. Symmetric, I think. Is that symmetric? Okay, whatever. Okay, symmetric. Okay, so the ascending triangle pattern. What? So you guys see it. There's support line. I'm drawing the support line at the bottom. I'm drawing the resistance line at the top. It's easy to draw, but it's hard to understand why this is happening. There's a monster happening. What's happening at support? Why do the buyers keep buying higher and higher and higher and higher and higher? They believe something is coming for this company, something big. They don't want to miss it. They want to buy. They want to accumulate. Every time this dips, they'll buy. They'll buy the dip, right? They'll buy all the dips. This is why it's forming that upward trending support line. As this dips, look at the red lines closely. These are dips. I'm not, did I lose you there? Okay, look at, what is this? Look at this. What is this? Like, what is this? This is a dip. Is this not a dip? This was a massive dip. They're saying, let's buy it and accumulate there. Let's keep this stock for that monster, whatever it is coming, right? Okay. So the resistance line. Same idea as last time, the psychology of resistance, right? Same idea. There's bag holders there from the past trying to dump their shares, but they are running out of shares. How do I know they're running out of shares here? This is the psychology of this triangle. I'm studying the psychology. How do I know? I'm drawing, look at my blue line at the bottom. I'm noticing the selling pressure is decreasing. They are running out of shares to dump. They are running out of shares. They keep dumping. They are running out of shares. And there's more buying pressure coming in. Buyers are stepping in to keep this price up is one thing. Okay, maybe write that down. I'm noticing, what do I need to notice? Superbloom told me. I need to notice that the selling pressure is fading away. There's just no more selling power here. There's no more left. Buyers continue to buy to keep this prices up, right? Or buyers are not buying. Selling pressure is increasing. Those are basically the four things you might have to, maybe what you have to figure out is selling pressure. Is it increasing or decreasing? Buying pressure. Is it increasing or decreasing? Right? And then what happens? This was in the homework. If you watch the video, he talks about this. In the corner, right? There's a squeeze here. How is there a squeeze there? What's happening in this explosion? What happened today? What happened was, what? The buyers, right, continue to buy near resistance. They kept buying on the ask. 344, 343, 342, 345, 346. They kept buying until there was no more left to buy. New volume starts to jump in. New traders start to jump in over the break of resistance. New volume comes in. Shorts, they have to cover now. At 350, they're covering. They're like, okay, we have to cover. They are adding to the buying pressure. The new volume is adding to the buying pressure, right? The people who think the monsters, a big explosion is coming, is adding to the buying pressure. Hence why the breakout. Is that the psychology of how this is working? Once we draw the pinch, or once we draw this apex, the corner, when the buying and selling pressure meets, there's an explosion. Makes sense, right? Makes sense there. Hopefully it makes sense. Okay, so what else? Here's the descending triangle pattern, right? You guys have seen me draw this many times. Okay, descending triangle pattern. Wait 1 second. Right? Okay, look at this chart. Descending triangle pattern. What's happening? So there's that blue line at the bottom. There's support. People are buying to keep this price up. They're buying to keep the price up. I get that. But what's happening on that diagonal blue line, the resistance? What's happening there? They're actually people are losing faith in this stock. The opposite of the ascending triangle. The ascending triangle is people thinking there's an explosion is coming. This company is coming up with news. They're coming up with something revolutionary. For this, people are panicking. People are trying to get out of the thing, right? That's why this diagonal resistance line is coming downwards, right? They get in. Nothing's happening. Okay, I'm getting impatient. So they're selling. And the bears start to attack this line until it breaks down. Right? That's exactly what this is happening. Okay, then what happens here? Why does it break down here? Because the buyers lose what? The buyers lose basically here. The buyers lose all the money. They'll keep buying at support, but nothing's happening. Eventually, they run out of money to buy all the shares. They run out of money, right? And then the bears attack. This tanks. Okay, so that's a descending triangle pattern. I'm not going to go through the head and shoulder. I personally think it's no. I don't want to give you my opinion on that. You guys can go through the head and shoulder, inverted head and shoulder patterns. Okay. Okay. This is a symmetrical triangle pattern, which is a third triangle, which I'm going to cover is these are powerful in trading. Ascending triangle, descending triangle, and symmetrical triangle, right? The symmetrical triangle is actually 50-50 move here. There's enough buyers and sellers to equate. There's enough supply and demand to equate each other. They equal each other. This is a 50-50 move. There's no way to know what's going to happen next until some institution comes in and says, okay, you know what? I'm going to buy here and cause the explosion, or I'm going to sell here to cause the breakdown, right? This is really up to the dynamic trader, which was what Mark Douglas speaks about in his video. This is a 50-50 move, but it's also something that you need to pay attention to. If you draw a symmetrical triangle, you have to say 50-50 move, okay? Okay, so I'm moving into the next. I'm done with the pattern stuff now, but I'm still going to focus. Okay, so my black line here and my red line here. It's funny. Okay, bear with me. Okay, the black line there is once it breaks over that black line, which is what I'm going to call what? The trend line or the counter trend line, right? Once it breaks over, my black line would be the entry. Is that right? That was my entry now. Counter trend line. That is my entry. Is that right? I'm not going to trade in the middle.
I got it, Jim. Thank you.
All right. And then what's happening what's the red line? That's your stop loss. If it breaks down, I'm stopped out. Okay? That's really quick. This is what, if you start drawing patterns, and you could be a pattern trader. Okay? All day you're looking for patterns and to take entry. Okay, where's that picture? Oh, Barry Norman goes through it in his video, right? He talks about entry and target and stop, so I don't have to really go through it. But here's the picture, right? This is actually the head and shoulder pattern, or whatever, the double top, double bottom, who cares? Okay, so what happens here? The break, the one on the right, the picture on the right, this is an explosion upwards. We're going long, correct? A break over the neckline, sure, call it what you want. Break over resistance, there's your entry. Look at your entry, above resistance. So if the resistance is at $1 and Vegas is like, guys, resistance is at $1, the entry is 105 idea. That's the entry. It's above resistance. Why is there above resistance? Does anyone know? If resistance, yes. Here, let's spend 2 seconds on this. If resistance is at $1, why do we want to enter at 105 and not 101? It's because at okay, if you're shorting at resistance, let's say you shorted at $1, you're short now. When are you going to cover? You're not going to cover at 102. You're not going to cover at 103. You're not going to cover at 104. You're going to cover at least 5%. You're going to cover at 105 probably, right? If we're in at $1 and it tanks to 99, are you stopped out? Is your stop loss that tight? So if you're shorting it at $1, are you going to cover at 101? You're not going to cover at 101. You're not. So when do you cover? You cover at 104. You cover at 105. When you cover, you buy. That's when the explosion happens. That's when you see the tape go green. That's when you buy. So the entry is now above resistance. Is that right? You guys understand that part? Okay. Where's the stop loss? Right? A couple percentages below the resistance. back down, I'm stopped out. I don't know. I don't care. I'm just stopped out. I don't know. I can't predict the future anyways. I took my entry and it goes over, and there's so much selling pressure. Some big hedge fund in New York is dumping now. I'm too scared. I'm stopped out. Look at my stop loss there. Right? Sure. This picture is calling it the double bottom. Whatever. So this is the pattern for it, right? Head and shoulder pattern. This is actually inverse head and shoulder pattern. Whatever. The pattern name doesn't even matter really. Okay? So there it is. But you guys understand the entry. I really want to talk. I want to talk about the entry really quick. How you take entries on patterns. Okay. Do I have another picture here? Yeah, I do. One sec. It's so fun. Pattern breakout. Where's that picture? Okay, here's a clear picture of this, right? What is this? Cup and handle move. Cup and handle again, right? This is a cup and handle technically, isn't it? This is a parabolic breakout. This is the second half of the cup and handle again, right? Where's the entry? Look at the entry points that this guy's drawing. Oh, at the bottom there, over the break of resistance. That green line in this case is, that's resistance over the break of resistance. The second one is the flag breakout over the break of the counter trend line, correct? So, but what's the theme here, guys? People are buying over the break of those lines, right? This is the pattern breakout idea. Over the break of those lines. They're entering when the line is broken. All right. So here's something. There's no picture to explain this. So there's a couple things. You could take the entry as it breaks over so if the resistance at 1 and you see it go 101, 102, 103, 104. Yes, you could take the entry there. Nobody's stopping you from not taking entry. People take their entry there. But if you take it over there, you have to realize that there's a risk involved. You're in a higher risk area that nothing's going to happen, right? Because the shorts are not going to cover until 105. You bought it at 103. The shorts are not going to cover till 105. So you have to take a risk that nothing will happen. So your stop loss, you have to manage your risk here. Your stop loss has to be close, tight, just in case it doesn't happen, right? There's another entry where there's a safety. It's a confirmation entry, which is as it goes to 105, the shorts start to cover. Now it's moving to 106, 107, 108. You could take the 108 entry. It's confirmed. Now the shorts are covering now. But yes, you do lose money there. You pay for the confirmation. You pay for the confirmation. If you want a safer trade, you're going to pay for it. You're paying it. It's called an implicit cost. You don't realize it, but you're actually paying for it. Okay? Implicit. It doesn't show up. Explicit means there's commission. You could see it. Implicit means it's hidden. So when you see the confirmation, okay, the candle is now, I see momentum coming through. I'm buying it at 109 now. Superbloom, for some reason, he bought it at 98. I'm buying it at 98 because I'm a risky trader, okay, with a super tight stop loss. I'm buying it when there's 500 shares. As it goes over $1, 102, I will add. 105, I will add even heavier. I'm building now a position. I won't get heavy until it makes its full move. That's how I trade, right? That's why when you see my entries, you guys are seeing, why does Superbloom buy like 4 or 5 times different prices around this area? Because he's actually building up a position. Okay, is that clear? What I just explained there. There's no pictures. Yes, is that clear? What I just explained there for that example. Okay, so we talked about the psychology of the cup and handle, which encompasses many patterns together. You guys will have to review the patterns. I talked about the entry and the stop loss, right? You could take any entry. Just remember this. It's a general rule here. You could take any entry you want. Tomorrow, if somebody alerts a ticker, you don't see any volume, you don't see any news, you see just a couple people buying it, you could take that entry. But if you take that entry, take small size. Make sure that if it does nothing and it tanks, you're going to lose little. Nobody's saying every time there's a pattern that you like or a news that you like that you have to put in your entire account. Nobody's telling you to do that. I certainly did it. Does that make sense? And always have a stop loss. The stop loss is what? to manage your risk. But I'm not going to go through that today. That's in position sizing class. Okay, so I went through that. Thought I had more pictures. Okay, let's go through this. So actually, the pattern breakout, I'm not. That's actually pretty okay. Actually, no. You know what? Because I put this here for a class, right? One sec. I thought we had. And wait, just give me 1 sec. I'm looking for one of my pictures because as you know, I trade. I'm drawing out these patterns for you, right? I'm drawing out my trend lines for you. Use this for class. There you go. Here it is, right? There it is. I actually put it in for you, right? So this actually tanked later. Okay, 1 sec. I'll come back here. I'll go back to class. I left the hallway. I left the class and went into the hallway because this is how the internet works. Okay. So here it is, right? I put this. Look at this. PZRX. I'm drawing the flag, right? I'm drawing my trend lines, my counter trend lines. I'm drawing them, correct? I'm saying, guys, over 64 idea to be safe. There's my red line that I drew in it, right? If it breaks over this line, I'll buy it, right? If it doesn't, I'm not in. I'm not jumping in until I see this break. Is that clear here? And in trading, is there any way for me to know break? Is there any way to know if the huge hedge fund in New York is just going to make this break? Is he going to take? No, there is no way. But what are we supposed to do? We're supposed to figure out the pattern, figure out the entry, and just wait for entry. If it truly happens, we take entry. And if it goes up, we start taking profit. If it goes down right away, we get stopped out. There's nothing to this. We can't have, this is from the Mark Douglas videos, we can't have any expectation of this. This is why I look at my notes. PZRX over 64 idea to be safe. I never said, guys, PZRX is going to rip. I never said that. I don't know. I have no idea. Who does? If you can find out somebody that knows that this was going to rip, you tell them to phone me. Okay? This actually tanked. This actually broke down. There was actually not enough buyers here, and we couldn't predict that. Okay? So, but this is an idea of how. Okay, one more pattern here, really quick. Okay, so here's the trend line for Archon, right? Here's the trend line for Archon, right? What is this? This is the ascending triangle pattern in this formation. I'm noticing this, right? Possible, correct? Possible, and then the red circle there, it broke out, it ripped, it went to the top. Yes, okay. But, okay. So here's an important thing when you're studying. There's actually no right or wrong way to draw these on any time frame because this is a 2-minute time frame, right? So I'm just going to throw it in here. I will draw this on the 10-minute time frame. This is now the 10-minute time frame, and I will draw it like this and like this, right? There's actually no right or wrong way to draw your trend lines as long as they follow the rules of technical analysis. The rules will work. This is on the 10-minute time frame. I'm connecting at least 3 or 4 points at the bottom there. That white line. 1, 2. How many times does it touch? They respect this trend line that I'm drawing at the bottom there, and at the top there, I'm connecting the swing highs together. I'm connecting at least 3. Right? Do you guys see that? So when you guys go back to draw pictures, patterns, don't beat yourself over the head if you don't know if you're drawing your patterns correct. It doesn't matter. As long as you draw your trend lines, and if it breaks over, you take the entry, and if it doesn't break over, you don't take entry. That's the trade. This is the pattern breakout. Okay? You could draw this multiple ways. Okay, it's just that over time, some smart professor comes in and says, guys, I'm not calling this the cup and handle anymore. I'm calling this the parabolic curve, right? This is how names are changed over time, but technically it's still the same idea. Is that fair? So when you guys go back to study your charts, don't beat yourself on being exact. Technical analysis is just an art, not a science. We're still trying to figure it out. Okay, multiple different time frames will do different things and show different things. Okay, so let's go back to the 2-minute time frame. Okay, so in this 2-minute time frame, what are we seeing here? If you could, I'm just gonna post this picture right here. If whoever can, here, right here, the 2-minute time frame, the breakout was over the VWAP, right? The breakout was over the VWAP. But what are we noticing? What is this breakout? Come on. Hard. I know you guys can't answer it. I know you guys are saying, "Oh God, it's a cup and handle, isn't it?" Doesn't matter what you call it. Who cares? This is what I'm trying to really get at. This is a huge cup, right? Consolidation and rip, right? This is a huge cup. Is this not a huge cup here? Or a bigger cup? Who cares what the cup looks like? There's a cup there. Does it matter if it is? Who cares? You know what? I'm really hammering home this idea that once you understand the psychology of how this works, it doesn't matter how you draw it. The key is always my rules from Superbloom rules, right? Over the break of resistance. See that 306 is the resistance line? So technically, I'm teaching you what I'm trying to say is I'm teaching you the pattern breakout to be aware, to understand the psychology behind it. The psychology is more important than anything else. It's buyers are coming back in this area. Sellers are losing momentum in this area. I can see the volume. This used to be a cup and handle, but I forgot the shape. I don't care, but I'm noticing what's happening at resistance. My entry will now have to be over the break of resistance. Correct? What I just said there. The takeaway is understand the psychology is more important than naming it, drawing it even, just being able to execute your entry, which is always going to be, especially in pattern breakouts, is what? Over the break of resistance, which is also over the break of those counter trend lines. Okay? Did I lose anybody in that? Can't tell, but okay, TJ, you can let them comment now. I think I'm almost done here. Like, this class is not supposed to be overwhelming. It's just to make you more aware, especially when you watch those videos. And then you go through the class. I think that TJ posted this. TJ posted this, right? Look at the entry here. Look at the entry. Okay, did I lose anybody any part? Look at the entry points. Look at the entry points in these three. Look at the entry points. It's over the break of those lines that they drew. It doesn't really matter what the pattern is called. They're connecting the lines, and as long as the resistance is broken, they take their entry with the stop loss. Okay? You must watch the Mark Douglas videos. You must take the entry when you see it, right, without hesitation, because you cannot predict where it's going. As soon as you think you know where it's going, all the emotions start to come in. Okay, I'm not going to talk about the emotions today. What else? So here's a good picture. My God, what the? This is a bad picture, but you can. Oh my! Okay, whatever. These are 3 triangles. Of all the patterns I want you to remember today, I'd like you to focus on these 3: the symmetrical, ascending, descending triangle, and the formation of the cup and handle is truly the most important parts. Okay? If somebody goes up to you and says, this is the wedge, this is pennant, it's just a derivative of these patterns. Understood? These 3 and the cup and handle. What else? Oh yeah, okay. So I was supposed to go reversal and continuation patterns, right? That's fine. Here, let me do a continuation one. Easy. It's easy. Don't worry. It takes like 2 seconds here. Is there a picture? Reversal. Wait, 1 sec here. I got it. I got it. So in your pattern, okay, maybe I haven't pattern. Okay, pattern breakup, pattern trading, reversal. No, I can't find it. What the? It's okay. It's not too much. Okay, so in pattern breakouts, in pattern studies, you guys will have to figure out which is a continuation versus, okay, wait, let me put this first, continuation versus reversal patterns, right? So here, you guys can write notes like a flag is a continuation of momentum. Flags are a continuation of momentum. Cup and handle is a continuation of momentum. Reverse head and shoulder pattern is a reversal, right? Let's see here, head and shoulder, right? Let's just go through the head and shoulder just to hammer home the reversal pattern. It says in the note. So look, the reversal pattern, right? So this is what you have to notice, pay attention to. This is the reversal pattern, right? Why? What happens here? And then you could pick this up. It's important to know that when you're looking at a pattern, that is it a continuation of the move or is it a reversal coming? So it's good to be aware of that, and it will take practice. So in this head and shoulder pattern, correct? It's hitting resistance multiple times and it's reversing straight down, right? It's breaking through support. That's essentially what it is. That's why this is a reversal pattern. There is no continuation of going. This would be going up, consolidating, and then going up, but it's actually not going up anymore. It's tanking. So this is why it's a reversal here. And there's actually, you inverse it and it becomes a bullish reversal pattern. So I don't want to go, it can get complicated there, but just focus on, just notice that there's continuation versus reversal patterns. Okay, I do want to go through this picture really quick. This I'm planting the seed. So as it breaks over the line of resistance, as it breaks through that counter trend line, right? As it breaks through the pattern, correct? Look at the left picture. It breaks through and it comes right back down. This is not confirmed yet. This move, it's still trading around resistance. There's still pressure here. If you jump in at this point, if you're watching the level 2 and you jump in here and it tanks and you don't have a stop loss, you're gonna look back at the chart and look at and see the left picture. You're gonna say, guys, I took the entry too early, right? I took the entry too early. Okay, on the right, closed above. This is, see on the left there, closed below. I took the entry too early. This is tanking, okay? Normal 3-bar reversal. The key word in this picture is reversal. It never crossed the line. It never stayed over there. It never stabilized above resistance. And I took my entry. That's why it's right. This is why you're taking your entry too early. So on the picture on the right, look at what the picture on the right. It closed above. The candle closed above resistance. Are we seeing this? Do I have to circle anything here to make you guys see this? Right? It's closing above resistance. Right? Correct? It's closing above resistance, and now I could take the entry. Now there's enough people bought there confirming the close, so I could actually now take the entry. This is minute, but the detail is so important. Okay, that's why I have that picture there. This is just the general idea of if you see your buying signal, are you buying too early? Are you seeing that you're seeing the pattern, but are you buying too early? Study that picture that I just posted there. Am I buying too early? Okay. I'm almost done here. This class shouldn't be laborious in any way. It should be fun. One last picture here. What the? Okay, this is to plant the seed for the future. To end this pattern breakout class, what's happening here? This is like a bonus question. I'm throwing you a curveball. What's going on here? This is one pattern that you could trade off of. There's 4 here. But what do we notice really quick? These patterns, okay, yes, let's call them hammers and inverted hammers or whatever. Look closely. This and this are exactly the same. Are they not the same shape? Are those not the same shape? They are the same shape. Look at the inverted hammer and look at the inverted hammer and the shooting star. Are they not the same shape? Yes, they are the same. So what's the difference between them? Why are they different? Why do they have different names here? The name actually tells you the location of this pattern. Okay? Okay, this is showing up here. Let me draw this here. This is showing up where? Support. Where is this showing up? Resistance. Right? Same pattern. Let's look. Same pattern here. Hammer on the left. Showing up where? Support. Now there's buying pressure. We learned this somewhere. Remember the buying pressure? Right? Buying pressure. Do I have to post that picture again? I have a feeling that I don't know. Just really quick. Buying pressure candle, right? Basically, this is my favorite picture because look at this picture. This is not buying pressure. I can see the buying pressure on that hammer. Yes, the colors are wrong. Okay, so on the left there, the hammer, it's showing up at support, right? That's why there's buying pressure. Buying pressure is actually keeping this up above support. Is that right? Hammer. Okay, hanging man, what's happening there? It's showing up against resistance, right? There's buying pressure there, but it's not breaking over. Ooh, what the? Is that right there? It's not. Look at the hanging man. Buying pressure is coming in. There's resistance there. That's why it's not breaking over. Reversing. Is that right? Is that right? This is really critical in the reversal patterns because we're going to see hammers on doji and you're going to see hammers, right? Right. I know you guys are like, I've never seen that before. Trust me. Look on the daily chart. How many you see? You will see lots. Okay, let's look at the inverted hammer. Where is the inverted hammer showing up at? And where is the shooting star showing up at? If you guys know that, where the shooting star, what is it at? Okay, so in the inverted hammer picture on the left there, where it's showing up on it's showing up at support. Selling pressure on the left, right? The selling pressure is coming down on it. Look at the selling pressure. It's coming down on it. Look at the selling pressure picture if you need to. Look at that selling pressure picture. It's coming down on it. It's coming hard. Right? Look at this. I'm not making it up. You guys have this. This is probably the most complicated part of this class. Look. The inverted hammer. Look at this. Selling pressure. It's coming down on it hard. But its support is being held there. It's held there. It's held strong there. There's volume there. If I see an inverted hammer at support with a ton of volume, this is reversing. Am I right? Am I right? Studying of one candle, okay? So shooting star, what's happening? Shooting star, a ton of selling pressure is coming in, right? A ton of selling pressure is attacking this thing. Look. Correct? Where's my picture? Wait, one sec. I know you guys all know this. Okay, look at the resistance here before we close the class. Okay, selling pressure is selling pressure is attacking the bears are attacking this at resistance. This is coming down, right? This is coming down hard. It's closing red. The shooting star pattern at resistance. reversal is coming. Okay? Is that a good way to explain this? These are all the same: shooting star, hammers, hanging man, whatever. It doesn't matter. What's most important about this? Where it shows up. Does it show up at support? Does it show up at resistance? And how is the buying and selling pressure being validated here? Volume, right? Right? I'm planting the seed. I'm planting the seed that you guys have to be aware of this. This is one pattern. This is the reversal pattern. One pattern only. Okay, look. Hammer, reversal pattern. Okay? So if you Google that if you Google that and you study it, class is almost over. Don't worry here. Right? What will you notice? What will you notice? One hammer only. You notice one hammer, and what happens? Reversal. Boom. Is that not a secret of trading? Is that how like TJ and I were talking on the trading? We're like buying pressure, selling pressure, and you guys are saying, how do we know this? How do we know this? Because we know this. Right? Look at this. Now you guys will understand when you guys study this on your own, how it's so powerful that in the end, Superbloom teaches you one pattern can define the reversal. Right? And before I go, when you see the hammer pattern, you could take entry on that hammer. Okay? So let's take it's almost done here. I just want to be really good here. Okay, look, you could take entry here. You could take entry here. If you watch this and you somehow bought the knife here at that bottom there, you could take entry there. You could take entry there. Okay? That's one entry. You could take entry there. And you're like, God, guys, it's reversing. Yesterday, you guys all bought the dip. Where else can I buy? Well, you could buy in this candle, can't you? You could buy the confirmation. This thing is reversing in confirmation. We know that this is reversing. There's confirmation there. I could buy at that entry. You could take those entries. You could take them. But right now, you're scared because you haven't watched the Mark Douglas videos. You haven't done the homework, and you slack off too much. That's why you can't take entry. But as you watch the videos and you study this recording and you study what I just taught you, the hammer, hangman, shooting star, and the inverted hammer, you will be able to take entry. Multiple areas. All right? All right? Is that good? Is that a good way to end the class? Teach you multiple patterns, and then in the end, teach you one pattern that you basically need to know. Basically. Right? So this one thing, you're asking, where the hell am I reversing? What am I really looking for? Okay, so class is officially done. Okay, so class is officially done. At this point, TJ, do you or Vegas or Jim, do you have anything to say here?
I just want to say that the class today was really awesome. And I just want to comment about how you really reinforced the entry points and really gave a very good example about when to enter a trade and specifically at, breaking the resistance, because sometimes, we post ideas and people have always wondered, why am I waiting for the idea? It's only a couple pennies away from the entry. And so many times we've really tried to explain that we don't want you to be stuck in a trade. I mean, you could take it sooner, but sometimes what happens is it never prints on the tape. And then what happens is you end up closing the trade for a loss, and now you've wasted a trade. So I really want the confirmation, and I love what you said about, you're paying for it, but you're paying for the confirmation. But if you notice, if you enter where there's a confirmation, most times you will start to see the trade move in the right direction. So, we're strict on it. I mean, I'm strict about it, but I find that strategy works. And you can even note down the entries and take a look at where the trade goes. And those kind of trades are, more successful than jumping in sooner. Sometimes people jump in because that's a lot of momentum, and I get it. And those ones are okay. But again, the risk is higher. So ideas are there for a purpose, to give you a chance to plan your trade, gives you a chance to look at the chart, and then it gives you the chance to decide do you want to participate in the trade when it prints on the tape? So thank you very much for that amazing, amazing explanation. It was really the best I've heard in years. So thank you.
Okay, TJ, do you have anything?
I'd just like to add to that too. Sometimes these ideas, right? We're looking for something to break, and we're looking for a continuation of what we saw earlier, right? We want to see that the volume continues and the trend or the trade that we're taking. We want to see the volume increasing closer to that breakout levels. And you'll notice on the pictures that Bloom mentioned that volume increases on these breakouts. So sometimes we are early. Sometimes we get into the trade before the volume comes in, and that's our goal, right? We have to have a competitive advantage. Now, sometimes it doesn't work out, but it's our job to play these trades, right? We are here to day trade or whatever, swing trade, and we're trading these patterns. And if we don't take the patterns, if you don't play the patterns that we are good at, then we are technically not following with our strategy. We can't pick and choose which bull flag to trade. We have to really play our strategy on the setups that we're looking at, if that makes sense.
Hey, TJ, do you mind you guys further explaining to Carlos what we mean by idea? I thought everybody got it by now, but maybe to clarify some more.
So it's an idea. It's a thought. We have been taking a position. We're looking at an entry, and this is probably the best ideal entry that we're going to be looking at to enter a trade. Now, we want to see a continuation of the momentum that we were looking at when we called out this idea. Sometimes it doesn't happen. Sometimes the volume isn't there.
Okay,
or the selling pressure gets overwhelming.
Let me explain it using the PZRX really quick here, okay? So when we say idea, okay, this is a trade idea. This is just an idea only. We don't know what's going to happen yet. So in this picture, this is the PZRX question that somebody asked up top, right? How do I know that 64 cents is the idea entry? Look at this. Look at the flag that I'm drawing. Look at those two lines that I'm drawing. That's creating this formation of this pennant, right? This wedge, correct? I'm saying, guys, if this breaks out, I will take entry, okay? My possible entry is 64. Idea, it could be 65, it could be 66. If I see people buying 63 and buying 64 and buying 65, I'll jump in around this area, around this idea, okay? Okay, so look at the 64. The reason why we wanted to take 64, and this actually broke down, right? This broke down. If we bought any earlier than 64, what would have happened here? If we bought earlier than 64, we would have ended up, if we bought it at 63, we would have bagged hold this, right? We would have bagged hold it because it didn't break. It actually didn't break. It broke down. So the idea is really important, and it takes a lot of discipline, because in a formation like this, when the movement is quick, had you bought here in this blue line here, let's say this blue line, which is 63 cents. If you bought right there, it would have tanked right the second you bought it. You bought it and it tanked. So I said, guys, 64 cents is the safer entry. If it could break over 64 cents, guys, look, if it breaks over 64 cents, what are we going to notice here? This will move up this way, right? And it will, right? As it breaks through it and causes an explosion, then we take the entry. Vegas has the idea. TJ has the idea. Discipline has the idea. I post it and I say, guys, this is the idea. I draw the circle. I draw the explosion. I draw the formation. This is an idea. Now we have to wait for it to confirm, and then we take the entry. Is that clear now what idea means? It's actually over the breakout resistance. That 6 line is a horizontal resistance right across, right? So let's redraw this picture really quick. Who cares what the pattern is, to be honest, right? Let's take one step back. Who cares what the pattern is? Is this not resistance here? This is resistance at 63. I'm not going to buy it there. I'm going to wait for resistance to break. It doesn't matter how you look at it, guys. It doesn't matter. You have to take it when it's confirmed, when it prints on the tape, when it's somebody's buying it before you, and then you jump in.
Can I ask a question about breaking the resistance?
Wait, is the idea question, is that idea?
It's a question about. Yeah. I was in the class. My question is, sometimes on the 1 minute candle, you will see it close above resistance, and you think, oh, this is a good time to buy. But when it settles and it's a 5 minute candle, you notice that the 5 minute candle didn't close above resistance. So, and you're like, oh crap, I thought this was going to break resistance. So how do you know which candle to use?
Okay, so here's the biggest confusion for traders, okay? You must have a trading strategy. Okay, for example, if your strategy is on the 1 minute time frame, your execution is on the 1 minute time frame, you're not going to look on the 5 minute time frame. If it closes over the one resistance on the 1 minute, you take your entry every time. That's the same every single time, 1 minute. And then if it moves up, great. If it tanks right away, you close out. Don't even look at the 5 minute, because if you look at the 5 minute, you should be trading on the 5 minute time frame. You should not be mixing the time frames together. Is that clear? What you just did is you're mixing the time frames together. I'm going to look at the 1 minute for confirmation, take the entry, and then I don't see anything happening on the 5 minute. You're actually mixing two strategies together. You're either trading on the 1 minute time frame, the 2 minute time frame, or the 2 to 5 minute time frame, or the 5 minute, 30 minute time frame, like whatever your trading strategy. But if you start mixing them together, you will lose. You'll confuse yourself.
Thank you.
Does that make sense? Does that make sense there?
Makes sense. Yeah, I've been making that. I've been doing 5 minute, 10 minute, 15 minute. I've been looking at them all.
Right. So you should not be doing that. If you are a 2 minute, 5 minute trader, let's say you focus on the 2 minute and 5 minute. Okay. I'm taking my entry on the 2 minute and I'm looking at the 5 minute time frame to see what's about to happen next. But I'm not using it to determine if I should get out or if I should take my entry. My entry will always be on the 2 is what I'm trying to get at.
Okay, perfect. Thank you.
So let's go back and answer those questions really quick. They're all the same questions in a way. Here, I'm going to copy it really quick. Okay, basically the patterns can be 1 minute, 2 minute. It could be on any time frame, whatever your strategy is. So if I'm looking for patterns on the daily chart, that's my analysis. I'm using the daily chart. If I'm using the 1 hour chart, that's my analysis. I could use the 1 minute, the 2 minute, the 5 minute. It doesn't matter. The patterns will all show. The information that's showing up in your face is all the same. They're all the same. It doesn't matter how you draw it on any time frame. They're always going to give you the same entry. Okay, so is that clear? I'm not going to go through it right now, but time frame analysis is a class that we go through two or 3 weeks from now. Okay, but the pattern breakout stuff all occur. It all can show up in many time frames, and yeah. Okay. Okay, so the general rule is if you're day trading intraday, use time frames less than for 1 hour, 30 minute, 5 minute, 2 minute, right? Less than a day and less. If you're swing trading, use a day or more, and sometimes you 4 hours, right? Swing trading, right? You're swing trading. You're holding this for days. If you're holding it for days, who cares what happens 5 minutes every 5 minutes, right? You don't care. You want to know what's happening every day for weeks. Then you could start swing trading this. Is that the general rule? You guys are understanding how that works here? Okay. I don't want to go through this time frame stuff right now because we have a class just for time frame analysis. I'm planting the seeds for patterns, right? We're going slow at this time, the volume analysis, and then when we do the time frame analysis stuff, we could piece it all together and study the chart time frame by time frame and realize that every time reveals a new piece of information. Okay? Okay, any more questions? Tony, did you have a comment? Or TJ again? Sorry, I interrupted.
Honestly, you covered it amazingly. You covered it precisely and to the point. It was beautiful. Good job on it. I think a lot of people will benefit from this lesson.
Okay. So questions are done. Class is done. This wraps up. So at this point, with all the homework that I'm providing you, you should be able to tomorrow, right? Tomorrow, notice an idea that Vegas is showing. TJ is talking about, discipline is talking about. I'm drawing the flag pattern. I'm saying this is the idea. You should be able to watch it and say, okay, I am going to take the entry confidently, click my mouse, execute, and then if it goes up, great, right? I'm in the profit. Guys, we're making money. Good call, right? But if it tanks, I'm stopped out. I'm just stopped out because we don't know how far this is going, right? We get stopped out right there and then we start to do what? Knife catch, right? There's a knife catch entry now, right? So many, many ways to look at this. With support and resistance and now pattern breakout, you guys should be able to figure out entry points now. Okay? That's class. And study the front loading definition. Will show up on a pop quiz. No, I'm kidding. Okay, I'm getting off. I need to go eat.
Thank you, Bloom. Appreciate it.
Okay, see you guys tomorrow.